Hey everyone, and welcome back to the channel. Today we're diving deep into a topic that might not be on your daily radar, but has huge implications for the global economy. Copper. The price of this essential metal has been on a tear, and it's sending some pretty strong signals about what's happening in the market. So, what's behind this surge, and what does it mean for all of us? Let's break it down. First off, let's talk about the big picture. Copper is often called Dr. Copper because it's considered a reliable indicator of economic health. It's used in everything from construction and electronics to power generation and electric vehicles. When demand for copper is high, it usually means the economy is growing. And right now, the price of copper on the London Metal Exchange is hitting levels we haven't seen in a while. This isn't just a random blip. There are some powerful forces at play. One of the biggest drivers is the expectation of interest rate cuts from the U.S. Federal Reserve. When interest rates are high, it makes holding onto non-yielding assets like commodities more expensive. But when the market anticipates that rates will come down, it often leads to a weaker U.S. dollar. Since most commodities, including copper, are priced in dollars, a weaker dollar makes them cheaper for buyers using other currencies. This increased affordability naturally boosts demand and pushes prices up. The market is essentially betting that looser monetary policy is on the horizon, and that's bullish for copper. But it's not just about monetary policy. There's a major story unfolding on the supply side, and it's coming straight from Chile, the world's largest copper producer. The state-owned mining giant Codelco has made a significant move. They've announced they will be charging Chinese buyers a record-high premium for their copper next year. We're talking about the highest premium since at least 2017. A premium is basically an extra charge on top of the benchmark copper price, and it reflects how tight the physical market is. When a major producer like Codelco demands such a high premium, it's a clear signal that they believe physical supply is getting scarce and that buyers are willing to pay more to secure their shipments. So why is Codelco doing this? Well, it points to a belief that the supply and demand balance is shifting dramatically. They're seeing strong demand from China, the world's largest consumer of copper, and they're anticipating that this demand will outstrip the available supply. This isn't just about one company's pricing strategy. It's a reflection of a broader trend. The physical market for copper appears to be tightening significantly. This means that while traders are buying up copper contracts on exchanges, the actual users of copper, the manufacturers and construction companies, are scrambling to get their hands on the physical metal. Let's dig into the China factor a bit more. China's economy is a powerhouse when it comes to copper consumption. Their demand is driven by massive infrastructure projects, a booming renewable energy sector, and the rapid expansion of their electric vehicle market. All of these sectors are incredibly copper-intensive. An electric car, for example, uses about 4 times as much copper as a traditional internal combustion engine car. As China continues to push its green energy transition and build out its grid, its appetite for copper is only going to grow. The premium demanded by Codelco is a direct acknowledgement of this powerful demand pull from the East. Now, let's connect this back to the global supply situation. It's not just that demand is strong. There are also growing concerns about the supply side. Major copper mines around the world are facing challenges. We've seen disruptions from social unrest, stricter environmental regulations, and declining ore grades at older mines. It's becoming harder and more expensive to get new copper out of the ground. For instance, First Quantum Minerals had to halt production at its massive Cobre Panama mine, which removed a significant amount of copper from the global market. When a major source of supply like that goes offline, the ripple effects are felt everywhere. This combination of robust demand and constrained supply creates a perfect storm for higher prices. The inventory levels in warehouses tracked by major exchanges like the London Metal Exchange and the Shanghai Futures Exchange tell a similar story. We've seen these stockpiles dwindling. Low inventory levels mean there is less of a buffer to absorb any shocks to supply or unexpected surges in demand. It makes the market much more sensitive to news and amplifies price movements. When warehouses are running low, buyers get nervous and are willing to pay higher premiums to secure what they need, which is exactly what we're seeing with the Codelco situation. So what does all of this mean for the future? Well, many analysts believe we are at the beginning of a long-term bull market for copper. The structural drivers, the green energy transition, electrification, and urbanization are not going away. In fact, they are accelerating. The International Energy Agency has forecasted that copper demand for clean energy technologies is set to soar in the coming years. To meet climate goals, the world will need an incredible amount of copper for wind turbines, solar panels, and the electrical grids to support them. The challenge is that the supply side can't just flip a switch and produce more. It can take a decade or more to discover, permit, and build a new copper mine. The current pipeline of new projects is simply not sufficient to meet the projected demand. This sets up a scenario of a structural deficit, where demand consistently outpaces supply for years to come. This is the fundamental reason why many experts are so bullish on copper's long-term prospects. The recent price action, driven by Fed expectations and the Codelco premium, is just the immediate manifestation of this much larger long-term trend. For investors, this makes copper an interesting asset to watch. You can get exposure through various means, like investing in copper mining stocks, exchange-traded funds that track the price of copper, or even futures contracts if you're a more sophisticated trader. However, it's always important to remember that commodity markets can be volatile. Prices can be influenced by a wide range of factors, from geopolitical events to unexpected economic data. For the rest of us, the rising price of copper could eventually translate into higher costs for many of the goods we use every day. Think about new homes, cars, and electronics. The copper inside them is a key component, and if its price goes up, manufacturers may eventually pass that cost on to consumers. It's a reminder of how interconnected the global economy is and how a price change in a single raw material can have far-reaching consequences. In summary, the recent surge in copper prices is not a simple story. It's a complex interplay of macroeconomic factors like interest rate expectations and microeconomic factors like the specific pricing strategies of major producers. The record premium being demanded by Codelco from Chinese buyers is a powerful signal of a tightening physical market. It underscores the robust demand coming from China's green energy and EV sectors, and it highlights the broader challenges facing the global copper supply. All signs point to a future where this essential metal becomes increasingly valuable. We are likely witnessing the early stages of a new era for copper, driven by the global transition to a more sustainable, electrified future. It's a fascinating story, and one we'll definitely be keeping a close eye on. Thanks so much for watching. What are your thoughts on the future of copper? Do you think we're heading for a super cycle? Let me know in the comments below. And if you found this video helpful, don't forget to hit that like button and subscribe for more deep dives into the markets. See you in the next one.